Hey everyone, welcome back. Hope you guys are having a great day. So today's Friday. Argo provided us with their financial results for the year ending 2022. So we're going to get into that in this video. We're going to look at some of the metrics that we do have for them, and we'll get into all the details as well. Okay, but as always, you guys know the drill here. This is not financial advice for entertainment only. Please do your own research. I'm invested in following coins and companies for full disclosure. And let's get into Argo here really quick. So if we look at, not that one, this is what I want. Okay, so Argo Blockchain PLC announces 2022 full year results. Now, with Argo being based in, I believe it's London, England, they only are required to provide their financial results biannually, meaning twice a year only. So we don't have all the data that we would have otherwise with some of the other miners that are based in Canada or US, where they provide quarterly. I like quarterly because we can see how they are progressing within 3 months of time instead of having to wait a half a year. But nonetheless, we do have some data for them. We'll take a look at it from their first half of the year of 2022 compared to the second half of 2022. Okay, so here's what we got. Argo operating highlights: increased hash rate capacity by 55% from 1.6 exahash at the end of 2021 to 2.5 exahash at the end of 2022. So that was pretty good growth for them. They weren't able to keep up with some of the other miners that have grown, well, more than them. Energized the Helios facility in Dixon County, Texas, and commenced mining operations on May 5th of 2022. They also executed an agreement with Epic Blockchain Technologies as amended to purchase block miner machines for use with Intel's block scale ASIC chips. 2,870 machines are expected to be deployed in Q3 2023. So that's coming up in the next quarter, potentially. They completed a swap agreement with Core Scientific for S19J Pro machines representing approximately 970 petahash, which ended the group's hosting agreement with Core in place of self-mining operations at Helios. Eventually, they ended up selling Helios anyways to Galaxy Digital. Galaxy Digital now runs that operations, and they are hosting their machines through them. On that one, let's see, financial updates. We can go through all of that, and I think that's it here that I really wanted to talk about. So let's take a look at the numbers that we do have for them. I pulled these from their results, and we'll get into those as well. But I just want to kind of go over this. This was updated also with all the latest numbers that we do have for them. As far as their BTC production has been concerned, that has been coming down here over the last several months, almost a half a year or so. And that's kind of the way it's going to be. Being stuck at 2.5 exahash, they're not growing much. Difficulty is increasing in Bitcoin. That's going to lead to less and less Bitcoin generated each month. All right. BTC HODL also has come down here. They've been selling a lot. They were in financial trouble as well. That's why they sold their facility. Got some cash infusion for it, which helped them out. And you can see that they've been selling, obviously. Their BTC per exahash efficiency has been coming down as well, possibly because of the curtailment that they've been doing. And you can see their hash rate here, consistent since August of 2.5 exahash, no growth. After that, monthly Bitcoin revenue has been kind of up and down, but it has been coming up here in the last couple of months. That's good, but Bitcoin price has been going up as well, so that's helping them out tremendously, even though that they are mining less. Okay, BTC sold value, you can see that here. And then here's what we got as far as last 4 quarters revenue. This is where things get a little bit complicated, and I'll try to explain this a little bit. So we do have some data prior to this mess that they got themselves into at the mid-year of 2022 through the end of the year. They were providing us quarterly results as well, but then they stopped doing that because of the troubles that they were in, I guess, trying to save money. So all we have here is Q1 data, Q2, and then we have the Q1 plus Q2 data, which is their first half, and then we have Q3 plus Q4 data, which is their second half of the year as well. So here's what we got. Revenue as far as that's concerned. So we can see that the revenue for the first half of the year was about 33.5 million in revenue, which consisted of Q1 being at 18.6, and then Q2 being at 14.8 million in revenue. Now for Q3 and Q4, the combined total was 25.968 million. That's down obviously from the first half of the year to the second half of the year. And then we're also seeing it here on the current quarter that we're in. It's estimated to be about 11.22 million in revenue. And if that continues to the second half of the year as well, unless Bitcoin really starts going up higher, they're probably going to be generating less revenue than they did in Q3 and Q4 or the second half of 2022. If they are at the same amount here, 11.22, we're going to get to maybe about 22, maybe 23 million in revenue, somewhere around there. But it all depends on Bitcoin, right? If Bitcoin just stays where it's at right now, they're not going to be possibly generating more. Okay, so that's kind of what we're looking at, things right there. Operating costs as well. You can see the operating costs have increased here from Q1 to Q2. They were at 4.3 to 19.1 million. And then for the second half, it was at 23.5 million. And in the first half was 23.5 million. And then the second half was 24.4 million. So a slight increase in there, but not too bad otherwise. As far as cost to mine 1 BTC minus depreciation, so I'm not including that in there. They were in Q1 at 9.36. And for some reason in Q2, I got a 40,000 for them. I don't know exactly why, but I did. And then for Q1, Q2, I guess the combined total would have been at $18.7 thousand to mine 1 Bitcoin. And in the second half of Q3 and Q4, it came up to 20.09 thousand. Okay, so that's still pretty high up there as it is. I did think, let me see here. I believe they provided something. I don't know if I marked it or not. Oh, I did mark it. Here it is. Okay, so average direct cost per Bitcoin mined was approximately 12,000 then. Average all-in cost, power cost, and hosting fees at Helios was approximately 5 cents to 5.5 cents per kilowatt hour. So that's kind of what their costs are right now, with Helios being managed by Galaxy Digital. Okay, so that's in there. And that might be why that's kind of up there as well. And let's see here, what else do we have here? Okay, debt to equity. So debt to equity had a huge spike here. Lower is obviously better. We want that to be lower. So the first half was at 0.8386. Second half for Q3 and Q4 jumped to 7.01. Huge increase there. We also saw the current ratio go way down here from 2.39 in Q1 down to 2.1 in Q2. And then for the first half, it basically was at 2.1 because that's the combination for the two. And in Q3, Q4, second half of the year was 1.12. So that's been coming down as well. And you can see that our total current assets has been coming down from a high of 218 in Q1 down to the combination of Q1 and Q2 for second half was under 171. And then for the first half, and then the second half was way down to 28.49. And that's, I think, why we're seeing that huge increase there in debt to equity ratio. Total current liabilities, Q1 was at 91. First half of the year was at 81.43. And now we're down to 25.05 in the second half for Q3 and Q4, which is good. So that's good there that they're paying down their debt. Okay, so let's take a look at some of the raw numbers that we do have on them. We'll get back into these metrics here in a little bit, and I'll try to maybe make this a little bit bigger so you guys can see it better. There we go. And let me see, these are all in British pounds unless I have it stated that it's USD. Do the conversion on that. So here's what we have. As far as current assets, this was kind of interesting to go through their sheet. It flows a little bit differently than the United States. So I was trying to keep up with it as best I could, and I think I got it correctly here. If you see any mistakes, let me know. I'm only human, I can make mistakes. Trade receivables was at 5.6 million. So that was down from 99 million in first half, second half. So we got Q1, Q2, this is first half, and then basically Q3 and Q4, which is the second half here on this column. Digital assets was way down to 368,000 from 28 million in British pounds. Cash and cash equivalents was up actually, so that was good there to 16.6 million from 9.2. Total current assets way down here to 22 million from 136 million. And that's in British pounds and USD. That would have been 171 million down to 28.4. Okay. Let's see here. What else do we have here? Investments at fair. That was 344. So a slight increase there. Investment accounted for using the equity method, 2.3. So that's down actually from 5. Intangible fixed assets was down to 1.7 from 3.6. So that's about half of what it was. Property and plant equipment was way down to 63.8 million from 157 million. And then right of use assets was only 435,000 from 374. So not a big difference there. But when you look at the total current non-assets, it's basically 166 million back in first half. Second half was only 68. Big drop there as well. And then total assets, we can see here about a third of what they were in the first half. So 303 million compared to 91 million in the second half as well. Okay. Current liabilities. So liabilities came down here, which is good, from 17.6 in the first half to 8.3 in the second half. We got loans and borrowings also went down from 44 million to 9.6. So that's good there. They're paying off their debt. And income tax, deferred tax, I think maybe these got switched around here potentially on the reporting. Total current liabilities was at 20 million compared to 64 million. So that's good there. And then in USD, that's 81 million and 25 million. Okay. let's see, what else do we have here? Deferred tax up to 6.5 from 442,000. Issued debt bond was down a little bit to 31.3 from 32.8 million. Loans and borrowings was down also to 21.4, down from 39.9, so that's good. Lease liability was up a little bit here to 448,000 from 385, but total liabilities went down from 138 to 80 million, so that's good there. And then in USD it would have been 174 million compared to 100 million here, so that was good. Let's see here, what else do we have here? And we got share equity in it, share capital, that's all pretty much the same, not much going on there. Take a look at revenue here. So revenue for the first half was 33.5 million, and that's in USD. This is in USD also. So first, second half was 25.9, so that's a decrease there. Bitcoin price obviously came down in value. That's the reason for it. Network hash rate also went up. That's another reason for it as well. So this is for the self-mining. This is in pounds. Direct costs increased here from 18.7 to 19.4. So that's not good there. They had a change in fair value of digital currencies also, a lot less, 1.2 million compared to 42 million. They were holding a lot more at that time, and Bitcoin price came down, obviously, in the first part of the year and continued on for the second part of the year as well. So that's the reason for that. And let's see what else do we have here. Direct costs was 23.5 million in first half. Second half was 24.4. Expenses, operating cost expenses went way up here from 9.8 to 17.6. Share-based compensation went down a little bit to 2.1 from 2.8, so that's good there. Foreign exchange, they reported 0 here. I calculated this by subtracting that from that, and I got negative 10.265. I don't know if that makes sense, but the numbers came out correct, at least on the year-end part of it. Operating profit loss, so it looks like they lost 35 million in second half compared to 46 million in the first half. So I guess that's good there, but overall they lost 81 million for the year. Nonetheless, operating expenses here, let's see what else we have here. A couple of things that were new here that weren't added before was loss on sale of subsidiary and investment was negative 44 million, and the loss of disposable of fixed assets was 18 million as well. So they put a bunch of losses in here. They lost a total of 198 million in second half compared to only 46 million in the first half. So that was a big loss there. And let's see here. Tax, other comprehensive income, currency retranslations, that's all the same. You guys can read over that. What else do we have here? So total comprehensive income attributable to equity holders of the company was negative 155 million compared to negative 43 million in first half. And then as far as losses per share are concerned, for the year, it looks like they said 40.98 pences. I think, is that 40.98 pences? Is that 40 pounds? Trying to figure that out. That's the one thing that I didn't know. So I don't know if it's 40 cents or 40, they said 40 pences, 40.98p on here in pounds. I don't know if that's 40 pounds or what. I'm not British or English. So that was a little confusing for me, but that's what was reported. So that's kind of what I left there. So overall, they have improved on some things. Some things have gotten definitely worse as far as their losses have been, but they included a lot of stuff in here that was probably the loss of the Helios facility, which they sold, some minor depreciation as well, other things like that, but they have improved on some things, so that's good there, but they still really need to grow as far as if they want to be significant, I think, in the mining space right now. But overall, I think the worst is possibly behind them. Now they just have to work on getting into doing better, right? Since they are fully installed right now with all the miners that they have, they really don't have anything to install. They need to grow. They need to buy miners. They can see how much cash do they have right now. Let me see, total current assets they have right now as far as cash is concerned, digital cash. They have 16.6 million right now, so they do have something that they could grow, but they do have, as far as current liabilities, of 20 million, so they really don't have 20 million pounds. They really don't have much that they can grow with that. Let's see, current assets, cash, where was cash? 16 million pounds, and their current liabilities is 20 million pounds. So it's not much, not a lot of wiggle room there, right? But the stock is right now at $1.80, $1.43 right now. Market cap is 94, so maybe a little dilution here to pick up some $50 million or something like that. And they have how many shares? They have 66 million shares, so they could dilute a little bit here to grow a little bit as well. And, you know, with a P of 10, with where they are currently, they're not really growing. If we see that they are growing, I'm going to give them a P of 5. So $1.89, they're $1.43 right now. I think they are a little bit undervalued where they should be. But if Bitcoin starts going back up in value, I think that's going to basically lift all boats at that same time. So at that point, they could be up even higher than that, maybe get to $2.83 potentially, or higher, depending on if they provide any news that they're going to be growing their hash rate or anything like that. That's what usually tends to spike these stocks up, as growth, right? Investors are looking for growth, which is normal, okay? So that is it. Let me know what you guys thought of all this. A lot of numbers as always. This price is going to be available to my Patreon members, and YouTube members will get a nice printed out version of this or a graphic of it posted to the word post on YouTube. I'll get access to that. Okay, so that's it. Let me know what you guys thought. Leave a comment down in the comments. If you like the video, hit the like button, subscribe. Helps me out tremendously. Hope you guys have a wonderful weekend. I'll see you guys in the next one.